Six o'clock.
Nice.
Um, oh, okay. So I'll be honest, I haven't prepared for this. So whatever comes out right now is going to be very abstract and not
Well,
refined.
because
Yeah.
walk me through the pitch.
Can I, may I try, if I may?
Yeah.
The way that we were thinking about pitching Asanka, and I'm not saying this is the right way, was Russ and I had, like when we met up in LA, the positioning that we are taking on is we want companies to become self-funded for life. There's some research that says that people are actually Googling that. Now, they may not exactly Google, I want to become self-funded for life, but some version of something like that. And how Asanka helps to fulfill that vision is that if you are, Howard, you're a bad example, but if your entire income is coming from your advertising agency, you may notice that there are other businesses, and we have 5,000, not 5,000, but we have other case studies of companies that are self-funded for life. But what these companies have done is they've invested in alternative revenue streams. So if the economy, I don't know, goes sour on you, Howard, and people stop advertising, alternative revenue streams would help you become quote unquote self-funded for life. So the way that we were positioning Asanka is he is a vehicle or utility that helps you become self-funded for life. Now, that's the overall arching board. The specifically why I choose Asanka's program is you can pick up the phone and talk to Asanka directly, so you have direct input. You don't have TD Waterhouse or Fidelity or some major institution between you and the trader. So you're making more profit and you have more input. That was the positioning we have at Asanka. Asanka, please, anytime that you feel I'm saying something incorrectly, stop me and say,
no, that's all correct.
You
that makes sense for me.
Or
I would say just to add to that. So I think, if I were to bullet point this, Howard, so firstly, the ability to make to diversify your returns for your business outside of your kind of traditional financing means. Secondly, this is a trading program, providing above average returns in this trading program at a very low risk. Thirdly, like Taimour mentioned, having a personal one-on-one relationship with a trader, which you cannot get through other means in other trading programs. Fourthly, which is something that I think is very unique as well, is that there's no lockup period for this program. So typically when clients join these hedge funds or whatever investment programs, they're locked up for 2 years or 3 years. This is something we may change later, but initially clients can withdraw and deposit whenever they please. If they're not comfortable, and even within a few days, they can leave. There's complete flexibility for the client, complete transparency for the client. They can see all the trades that are taken. They can see every single change and movement of their P&L. So it's the transparency is there. So I think those are the 4 main points from my perspective.
Right. Yeah. So Taimour shared those with me last week. So a couple of things. Okay. So first of all, I'm going to contradict Taimour for a second. Okay. And the research. I'm not sure the value proposition is funded for life. Okay. So I'm not saying it isn't, but my initial reaction is it's not a question of being funded for life. The question is, and it's a truism that everyone's going to nod yes to, because everybody knows you shouldn't put all of your eggs into one basket. That's really what you're offering, right? I'll give you an example of that. I'm diverging for a second. I can make it more succinct, but I'm gonna diverge for a second. So I did work for a company called Prime Quadrant. I might have mentioned them to Taimour in the past, and they deal with only high net worth individuals, family offices. They're independent. They don't sell their own products. They take a holistic approach to your portfolio. They will give you an opinion on your portfolio. If somebody offers an investment to you, they'll give you an unbiased opinion on it. A whole bunch of services they provide. But when they started off, and part of where their history is, their proposition was, before they morphed into that, I worked with them as they morphed into that. They offered alternative investments, and alternative investments we're basically beyond buying shares, beyond the stock market, et cetera, et cetera. There's other areas that you can sort of invest your money, and they were specialists in alternative investments. And I forget it. I remember doing the work for them a number of years back. I forget if it was Harvard or Yale or whoever. If you actually look at their returns, because they've got these $100 million portfolios that they're investing of the alumni money, kind of thing, in trust, and X portion of it are alternative investments. And part of their proposition was basically invest like, the Harvard Trust Fund kind of thing. You need X proportion to be alternative investments. Their argument at the time was similar to your sort of fundamental philosophy of, yeah, you own real estate and you own your house and you own your this and you got to get shares in this and da da da. You have a will and da da da, but you've got to diversify because stuff can happen over the length of your lifetime, right? The basic message was diversify because you shouldn't put all of your eggs in one basket. To me, that's the proposition that I get, kind of thing, right? So. Sorry, they called and booted me out. That's your basic value proposition, and the proposition is not funding for life. Is don't rely just on your one business income stream for as your only source of income for the rest of your life, right? Because stuff can happen. Right, so diversify. So it's a little variation on the for life thing is there, yeah, because it's okay for now, but what happens if the world changes 3 years from now, 5 years from now, God knows what kind of thing, right? So I think your message is about diversification, right? Yep. That's number one. Okay.
Howard, in a minute, I'm going to ask Russ and Asanka about what they think about that. But I guess the first follow-up question to that for you, Howard, is right now the kind of like a shelf product line we have for Asanka, it's just a draft product line, is rent a Forex trader. If the message is diversify, should we create a product name, service name around diversify?
You can, but I would say like Forex trade. So the question then becomes, okay, how do you diversify? So these guys at Prime Quadrant had an alternative assets you could invest in. Your solution is, and you should study the Harvard, Yale, hundreds of millions of dollar foundations investment portfolio, what they say about alternative assets. Your message is one area that you should be diversifying to is foreign trading on exchange rates, because it changes on a daily basis, and there's always been money to be made on foreign exchange trading. That's sort of, okay, I should diversify. How should I diversify? Many ways to diversify. The offering we want to talk about today is foreign exchange trading. So then there's two streams of things that you have to answer. The first stream of things is, well, I don't know anything about foreign exchange trading, okay? And you sort of articulated them, What are the returns? Typically, right? Show me, prove to me, what are the numbers on returns? What are the risks? Right? Okay. So that's the two things. Okay, you're telling me to invest in this, but like how much money I'm gonna make and what's the risk I'm taking on? Because I'm taking money from my family, my company, my whatever, where I'm taking the money from. That's sort of step two. Step three is, okay, you convinced me that maybe I should be diversifying. One of the ways to diversify is foreign exchange trading, because this can give me some great returns and I can afford to lose X amount of money and the risk profile is only blank. But then the question comes, Taimour, our famous question, why choose you? And why choose you? Your answers were, in our program, we're eliminating X, Y, and Z, the middleman, and we're passing those savings right on to you. So you're automatically making more money if you utilize another foreign exchange trader, right? Secondly, you're not just a number in a file. You've got direct access to us if you have any questions about what we're trading or what's going on an ongoing basis. And thirdly, We give you liquidity in the sense there's no lockdowns. And you put lockdowns together with returns and risks, and that doesn't belong there. It belongs with the why choose you. It's the third element of the why choose you.
Mm.
That's how I would sort of tell the story. But I'm all about storytelling. What's like, how do we build the story so someone's going to buy? The first story is, do I need to be investing in something different? Well, yes, you do, because right now you're betting on X, Y, and Z industry.
Yeah.
And life happens, and the world can change, and you need a lifetime, or not even a lifetime, but a longer term view. Everybody tells you don't put eggs in one basket. Stockbrokers will tell you, so invest in multiple stocks, but you're still investing in the stock market. You need to invest in a different type of investment. There are several good ones. Our specialization is Forex. Right? Why is Forex great? Forex is great because on a daily basis, people are buying and selling in different currencies, and there's always a spread to be made between the currencies. The return historically in foreign exchange trading has been X%. Okay. The risk profile is really not that high because we have stop trading, loss orders, blah, 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 whatever your answer is. So we minimize, the great risks, but the upsides tend to be much higher. Okay. So once you convince them alternative investments, Forex, then you're into YU. I'm just trying to bang it into your heads, not the storyline, right? Because I'm experienced. We've cut out the middleman. All that, the cutting out the middleman, the money's going directly in your pocket. So if we both bought the same, if you bought from me and you bought from somebody else, your returns are always going to be higher because I'm giving that money back to you. So I worked with someone who was in the wealth advising business. Okay. And in certain of the investments you buy, there's fees that you get, right, when you sell it. Okay. Not her whole proposition, but part of her proposition is, she said, I forget what it was. I wish I knew now. Let's say it was ETFs. I don't remember if it was ETFs. Let's say it was ETFs. Okay. She said, generally, ETFs are a bad investment. They're not fundamentally a bad investment. The problem is, every time a broker sells an ETF, they're taking 5% off the top. By taking off that 5%, they've taken away the true advantage of an ETF. For my clients, the same 5% is there, but I don't keep it. It's full disclosure, and I give it to you back. That's not how I'm compensated. I'm compensated on a monthly advisor fee based on the amount of money you have with me. So that was part of her value proposition. So what you're basically telling people is, because that person is no longer having to be taken care of, you're giving the money directly back to them. So that was Rona's. I can get you the name of her company. She probably says the same thing. Kind of thing. Today it was.
That makes sense. Yeah.
Yeah, but you follow what her sales pitch was? It was effective.
Yeah.
Right. And it's sort of the fact that she was being transparent and saying, I could have this money and I was giving it back. It made me believe in the rest of her whole proposition. Right. Let me see if I can find her. Her company is called, listen to this for a name, Taimour.
Yeah.
Listen to the name of her company. What do you think the name of her financial company is?
I don't know.
The financial company.
She's a financial consultant. What is the name of her company? You'll never get.
Don't invest in whatever it is.
ETS.
Is it in English or is it?
Nope. Caring, company name, Caring for Clients.
Wow. Okay.
That's a good one.
Financial planning with a different.
Caring for clients.
Yeah. Okay.
Sounds too nice.
Well, because she actually walks the talk. But anyway, And that, so the philosophy of giving you back the finder's fee, brokerage fee on the ETF is part about caring for clients. She doesn't double dip, right? And that's why she financial planning was a difference, right? And her top line on her website, you take a look at it later, sleep better. Have Toronto's best financial planning firm looking out for you. Like, take a look at her website. Taimour, pull it up. It's like, I always loved her website.
What was the name of the website?
Caring for clients.
.com. Wow,
I got it.
pretty.
Okay, pull it up and show it. I want Russ to see it too.
Caring, sleep better.
Okay, keep on going. That's Rona. She's got a video.
I know
Right?
her. I know her. She's been in this industry for a long time.
Oh, she gets covered in the newspaper a lot. Right? The blogs, the recommendations, right? Content, just as a format for a website. I always liked her content and her approach. If you're looking for like a best practice, right?
Yeah, it looks very welcoming. That's the colors, everything. It's
Color,
very
green, all that kind of stuff.
yeah,
The caring,
yeah.
the messaging.
Right.
I mean, not for now, but Taimour and Russ, if you wanted to study like, and that's financial planning, but it's financial planning with a difference, right? Alt funds global, like, you know, financial opportunity with a difference. It's an interesting positioning, right?
Yeah.
You know what I have to just share for myself is my wife and I were thinking about taking some money out of our Novatech account and putting it into Asanka. And Novatech is, I'm going to say it the wrong way, but Novatech has been a lot longer than Asanka and AFG have been together. And they definitely have a lot more clients than Asanka and Taimour have. So Novatech's rate of return is comparable to Asanka. But I think the reason that Howard, as you were talking about it, on why we were thinking about taking, not liquidating, but, you know, like transferring our position from Novatech, chunk of and putting in Asanka, I would probably say because of diversification. But when I was talking to my wife about it, we didn't language diversification. But now that, as you were saying it, I'm thinking probably that's the exact reason why we were thinking about putting money with Asanka. It certainly was not because of rate of returns that he's producing.
I didn't lead with rate of returns.
Right.
I led with important to diversify.
Right.
Rate of returns is important.
Yeah.
Right. But I'm not leading because that's a pricing thing. That's like, buy me, I'm cheap. I'm not leading. It's, you know, price is important, but you got to start with your value proposition first.
Right.
Yeah.
Asanka, feedback, Russ, feedback. Please kick back, yell, scream.
Yeah, there's no pride of authorship in what I said. It's just what I think your story should be.
I think the story you kind of outlined there, Howard, which was, like you said, start with the fact that you're going to want to diversify. Then you go into return and risk. But why me would be like the thing you said, cutting out the middleman and no management fees, having the one-on-one relationship, no lockup period, an experienced trader. I think that story is a very smooth way of propositioning a client. I think that makes sense completely.
How long could you have a one-on-one relationship for based on your business modeling?
Yeah, I was thinking about the exact same thing. I was thinking about the exact same
That's a good point.
I don't think this is sustainable.
Or maybe it creates urgency now. Well, no, you can't, because if you said to everyone, if you come in now, you've got one-on-one, then you're stuck with them one-on-one for their
Well, is it one-on-one at the beginning, or is it for a phone call, or is it once you can put parameters on it, you know, once a month, whatever?
That's true. So now right now it's more of one-on-one in the beginning, and because it's fairly new, I'm kind of alive. People want to have another one-on-one after a few weeks. I'm okay with that. But I think like Russ said, later on when we have 100+ clients, I can't be having one-on-ones every day, right, with people, because that just goes It's just not possible. So it could be that we just have the first touch one-on-one to allay any concerns. And then afterwards, it may be, on a paper call basis or through email. Maybe the form of communication is different after the first one-on-one, which is a video call. Or it could be it could be focusing on bigger clients, corporate clients for one-on-ones. So not for every client. It could be a specific one-on-ones, depending on the client, size of the client. No, but that's a good point, Ross.
No, you're right. It's well, if you over time you have other people, right?
Yeah.
So
okay. I'll put a question. I made some notes. I'll put a question mark on one-on-one for long term.
What was the reason behind the success of the last push that we did? Why do you think we had so many people jump A, to book a call, and then B, actually sign up and put funds with you?
Good question. I'm trying to remember how Taimour pitched me on that webinar, because he literally just pitched me for a few minutes. But I think the focus of Taimour's pitch was the fact that there is that direct relationship with me.
The January webinar, from my recollection, was I'm going to say the wrong way. The world is coming to an end, and I had evidences from CEO of JP Morgan. This. And by the way, Russ gets, I think, daily updates from me. World's going to an end. Here, yesterday was the IMF saying the world financial crisis is coming. Here's evidence. That was the January event. And then what I suggested is, here's some things AFG is doing to diversify for us to be ready. And I use Asanka as a indirect conversation, saying truthfully, we've given money to Asanka, which is the truth. And I recommended Asanka.
Yeah.
Russ doesn't like the team, the world is coming to an end. He's all about possibility.
Depends on what you believe is going to happen if the world does end. Isn't it supposed to be eternal life afterwards?
There you go. He's all about possibility. This is
the perfect
thanks,
CEO. I love it.
This is why he's a perfect, excuse my language, fucking CEO for me. Because whatever I think, he's the opposite. That's fucking awesome. I love it. It was all set up.
I don't think the world ending is the answer. It's
Russ just asked. Was the last time that we recommended Asanka?
Look, life happens. Okay, life happens. No one predicted. Legitimately, I would give you examples. Okay, no one predicted 5 years ago the pandemic.
Yeah.
But I would actually have a list, right? But life happens, right? No one predicted the extent how AI might change our lives with ChatGPT and other such whatevers. But life happens, right?
Yeah.
No one predicted the downfall of the following companies. And I would list some big companies that have crashed and disappeared, right? Because life happens, and because you can't predict the future, you need to diversify. That would be part of my ad if I was doing an ad kind of thing. You know what I'm saying?
Yeah.
So
you can fill in the examples.
So that's the common thread that Taimour in the webinar. You said the end of the world, but then at the end, this is what AFG is doing to diversify. That's what you're pointing in on, is the diversification, Howard.
Yeah.
So I think that part we're all aligned on. Yeah. The next part then is, though, a current flow of personas that come through, and why, why is it for? So yes, definitely diversification, but then when you dig down deeper than that, so based on our different customers, like the Novatech clients that we signed up,
Yeah.
they don't have 100K USD to jump into a managed buy and sell.
Yeah.
They're usually in okay jobs or okay businesses, but they're actually after additional cash flow. And then what I've noticed the trend on those people is a third of them are just reinvesting aggressively.
Yeah.
A third of them are half reinvesting, half withdrawing, and then a third are withdrawing every week. Now with the Sanka's model though, it's not $99 to get going, it's 10 grand USD to get going. And then B, the model really works if it is, so diversification, yes, but secondly, then performance, if you're leaving your money in. So yes, there's no lock-in, but ultimately how it's truly going to benefit you. Whereas the clients that they're just.
You're right. No, Russ, you're right. It's a different profile. So the person who's coming to you because they need money for a project is very different than the person that is saying, hey, I'll take a gamble on this. If I can make some money quickly, take some in, put it all in, double down. There's different profiles within that. Very different from this, because this has got a longer term horizon than in or out. So this would be a different personae. This is the person that's afraid that in the long term, they have money to invest. It's Taimour. They have money to invest. The question is, where should it go? And I would never tell Taimour, invest just in Asanka. I would stick with.
But the why? Why would you say Taimour should invest with Asanka? And I'm picking it's for long-term compounding growth. It's not for cash flow.
Right. It's not a cash flow. That's what I'm saying. It's a different persona. If you have enough money where cash flow is not your issue, where the issue is you're thinking longer term, and you wanna lower your risk. Because right now you got too much in one pot. You got to look at diversification. So this is somebody who already has that investment pool.
Yeah.
Right. And they've got too much. I go back to prime quadrant. Right. And what they were basically saying, everybody they were talking to had like 10 million, 100, like they all like massive investments. Right. This was, hey, you need to have a different asset class. We're not telling you not to invest in the other things. We're just telling you got to diversify, because when stock market goes to shit, guess what? Alternative asset investments go the other way and go up.
Yep.
Right. I don't remember the details, but that was generally what the the message was. I don't know how they're selling today. But because they when I worked them, we worked them into a new business model kind of thing.
Yeah, well, I met with New Zealand's top wealth managers, and their whole remit was if they delivered 16% per annum to their client base, they were looked at like gods. But it wasn't actually about the growth; it was more about that the client's capital base didn't decrease. That was the most important thing.
Capital protection.
Correct. That was the most important thing for that customer group. So but that's why we had a success point there when you signed up those people, Asanka. Why do you think? What position were those people in? Were they didn't have enough for a buy and sell, or they did have multiple funds? Like, were there any trends across those people?
Right. I think the majority of the 18 people or whoever I spoke to was the fact that yes, they initially came to Taimour because they wanted to join a buy and sell or PPP, but they didn't have 500K or whatever, 100K. They have 30K lying around, 15K lying around, maybe even a little more.
It's a smaller.
There's a rare occasion.
Yeah.
What's that? Yeah. So there were some. Yeah, small players, exactly. And there were some people, don't get me wrong, there were some people with 200K or even $500,000 thinking about it, but those were 10%. That there was a smaller majority, but the majority was definitely the money's sitting in the bank. It's only making 1%, less than 1% a year. I want to use this money and put it somewhere else.
And that's the angle I've been going. And it's not so much about new customers, it's about existing customers, about when they've got returns. And if they've currently got money just sitting there with the banks getting closed down and some people's money getting blocked. I'm referring to Asanka's model as an interactive savings account. And so you can have all of your money sitting there, say you're earning 1%, or if you're earning these returns, but you want it to be liquid, and I'm not saying pull it out every month, I'm just saying that at a click of a button, worst case scenario, you've got access to it, then put it into Asanka, and then at least it's growing by X% per year, but you know you've got control of it whenever you need that situation.
You're right. So diversification is one, and the other is don't let your money sit idle. Your money is making money for you.
But that's when I think, from myself personally, when we're going to get a crap load of customers, is when a lot of our clients get the returns from the programs that they're in. It's going to be, you know what, you're asking for a plan. Here's what the plan could be. So bang, and there's going to be a big chunk of that into Asanka's. And then if they go into a monthly program, every time X% goes into Asanka's program each time. So that one just builds and builds.
You should actually say that. Like you should say, hey, we want to make sure our investments are for you. There's two kind of people that normally invest with us. Ones are the ones that want to diversify because they're de-risking their portfolio. And the second kind are people who don't want to have their money sit idle. Right? They understand they're not putting it in for just a week or a month. It's typically longer term to get the best returns, but they know if they ever need to pull it out, they can pull it out immediately. There's no restrictions. But just putting it in the bank and not earning any real interest doesn't make sense. So you can actually call that out. You're good for two personae, not just for one.
I think you've hit the nail on the head, Russ. I think it really rings true. Because especially in the current environment, right, with Silicon Valley Bank and all these bank closures, bank runs, it's kind of like I don't know how you'd call it, like an enhanced or enhanced saving account or a accelerated saving.
Steroids.
Yeah, exactly. Because like you said, there's no lockup. It's kind of like you can just move your money in and out as you please, except you're making 10 times the return instead of keeping it in the bank.
Don't let it sit idle.
Yeah.
Taimour, pull up Prime Quadrant. See how their website is. It's actually quite cool also. They've really grown since I work with them. Holy shit, I want a piece of the action.
Prime Quadrant. Okay, good.
Prime Quadrant. This is your show for us.
That rings a bell, actually.
A content angle could be that we've had clients saying, hey, we're a bit concerned about the banking industry at the moment. We've got cash just sitting there, but we do need to make sure we've got access to it. Any ideas?
Are you banking on the wrong future?
Yeah.
Are you banking
that's pretty
on
good.
the wrong future? Love it. That's brilliant. That's
with the recent collapse of the banks, right?
That's pretty good.
Anyway, pull up Prime Quadrant. Show these guys Prime Quadrant. Because you're talking to me, the other topic was websites. I wanted to show you other good websites, right? Empowering families for the future, because affluent family offices deserve better. Okay, keep on going down. Like in terms of just for your base product, right? For the big stuff. Let's just read their stuff. Purposeful. We focus on helping families achieve the highest priorities, empowering them to make better decisions. We're always aligned, transparent, and squarely in the client's corner. Our integrity and independence are the most valued assets. You could say that, right?
Yeah.
Go back.
What's
Go back. You're going too quickly. Tenacious. You could say that
The
as
values. Yep.
We're relentless learners who prize excellence, always seeking to set a higher standard for ourselves and our industry. You could say that as well. Humble. We value those around us, recognize that nothing meaningful can be achieved without our collective efforts. Like you could actually steal some of those values, right? Now look at these guys. Okay. Assets under consultation, 18 billion. They weren't there when I consulted for them. No, but it was about getting here, right?
Yeah.
Okay. What sets us apart? Which is I was talking to you, like, why choose you?
Yeah.
Holistic approach doesn't apply. retainer-based fee model, right? Access. Here's your access. No, it says access to investment.
Yeah.
This is what you do in your main line of business, Taimour. You provide access, right?
Yeah.
We help our clients gain access to some of the leading investment instead of managers and opportunities, leading investment opportunities around the world, which are often only accessible to large and highly sophisticated investors. You should steal that paragraph and adapt it.
Yeah.
Right?
Yeah.
And here's the stuff I talked to you where they started. Multi-asset class approach.
That's what you do, right?
Yeah, across 7 asset classes. So they've gone to, you need 7. Anyway, there's a couple of things you can steal from this website.
So I've been in digital for over 20 years.
Yeah.
And help organizations scale globally on an omni approach, not just a digital approach.
Yeah.
When does it? So I understand best practice, but I'm not quite aligning on your guys thinking of best practice, because at the moment, what I feel is there's something always changing. I've always done that based on data, not just based on inspirational thoughts are coming, we should do this, or we've seen that, we should do this, we should do that. There's always controlled methods of split testing to see if it gets the design.
You could absolutely do that. One of Taimour's questions earlier today was, hey, we're changing the reason why I brought that up is because we're changing the wording, not the direction. It's how we describe it. So I was looking at things
why are we changing the wording though? For what purpose? What outcome are we trying to achieve? What outcome are we not getting right now? And what outcome are we wanting? Because otherwise,
Taimour, you
we just keep changing for the sake of it. We're just spinning wheels.
Taimour, you answer
business.
I can answer that. So I think a month ago or something, I went to Sarah and Russ. I said, can we change some of the names of our services to shorten it a little bit and to combine some of them? Russ, you said yes. I would have never done it. I wouldn't have spent so much time if you didn't say yes. But you said yes, and Sarah said yes. And give me 1 second. Give me 1 second. I apologize.
But I don't think you're changing anything fundamental, right?
Yeah, we're not. This is sorry, Russ. This is not the website. This is not the website. This is just products and services. So Russ, just give me 1 second. Watch this for 1 minute. You know the the one bond transaction from last week. Give me 1 second. Sorry. I need to find the bond one. Okay, so Russ, watch this. If your instrument is if you're giving us a bond, is this bond trading? If not, why not? What is the rating of the bond? How liquid is the bond? Where is the bond lodged? Does the company who issues the bond has the capacity to pay dividends or yield on the bond? We don't have this stuff on our website. I promise you, we don't have it for bonds. And I can go into SBLCs, DLCs, like that. And by having a little bit more detail and clarity, I think, you know that Craig, that CEO guy? Now, next time he wants to have a call, if the website has a little bit more detail, I can say, did you answer these questions? Do you know about these questions? Do you answer these questions? Like that was, that was the intention.
Okay, so that
can go on and on.
That's different to when Howard's bringing up websites saying, "Oh, you can look at that value proposition, change this, change that."
No, that's not a value proposition thing.
This I understand the value on, because it's very black and white, and I'm using the bits that we do have currently. It's really good. I can't get the word out of my head right now, but it's a really good thing. I just copy and paste it, the little snippet from the website. Yep, sure. If you've got it, if you're about to issue an SBLC, here's what we need. So it's a really good structure. So if it's built out more in depth that way on our products, the The only thing, as per Brendan's point, though, is right now we're SEO rich for appearing for the search terms that have the volume of the type of people that we're looking for.
Yeah.
So we just need to take that, and we can do all those changes you're talking about, but it's the headers and the names. We need to be careful how Brendan introduces them to the website so we don't lose that SEO juice.
100%.
But apart from that, it's brilliant having it as a resource.
100%.
Because I can just copy paste. Yeah, it's good.
100%. Okay.
I would say,
Taimour.
just say that I
sorry.
have some standard, I don't call it webinars, pitches, whatever that I do. Okay.
Yeah.
And I would tell you that, and my staff will tell you, and I've done some of these 80 times. I'll still in going over it, sometimes change the wording because all of a sudden I get it done. It's a better way to say something.
Yeah.
I don't change the fundamentals of the content,
Yeah.
but how to word it, like how to word it, I actually do change, not on a daily basis. It's when I look at it and I go, there's a better way to do that, or I see something that's better. Always trying to learn. And my assumption, what I tell my staff is, I'm not perfect. Need a fresh set of eyes, and sometimes on my own fresh set of eyes, because I look at it and I see something I never saw before, and it's just a better way to say the same thing.
But do you measure it, the impact? Because otherwise you're just spinning your.
I know when something is better than what I have, like, because it's how do you tell the story better is always about it. And I'm not saying he should adapt any of those things. I'm saying he should take a look at what he's currently saying, and are they saying it better? Would you adapt something or not? You don't have to.
That's right. But with Taimour, he would look at it every day and change it every day.
No, you got to change it every day.
So I think it needs to be a once a month or once a quarter spring clean, so that we systemize it a bit more and we focus our mindsets.
Yeah.
And it because otherwise, you know,
that's a Taimour issue.
That's
yeah, but then it becomes an hour issue. So you know, there's equally other things. Yes, it needs focus, but there's other things that need focus as well. You know,
100%.
not just the front end of our business.
So talking about focus, I have a focus-based question, if I may. So Howard, I published a book.
Yeah.
I promise I have it somewhere. There you go. Structured Finance.
Okay.
I think Howard, you read it.
Nice.
Asanka
That's
read
pretty good.
it.
Yeah.
We haven't launched the book to our database or things like that. The only reason I mentioned that to you is that I also approached Asanka and said, Asanka, can we co-author a book? He said yes. I don't know how long I spent time writing my piece of it. And
you have something to say. So the first thing I would say to Sarisha, show Taimour your chapters. What are you going to talk about? Well, don't worry about writing the book yet. What are your chapters? Do you have enough to say?
Yeah, 100%. So the book with me and Asanka, I wrote my half. Asanka recently wrote his half. So now we've got, I think it's going to be the biggest book that I don't want to say I've published. In this case, I'm co-publishing it. But so going back to having a focus question, I don't mind putting a pause to launching my book, if I can say that way, but rather launch the book with Asanka, because I think what that drives is investment capital to himself in a legal way. The reason I say legal is because I don't have license to sell securities, at least in Canada or in Ontario. So my pitch was, hey, let me tell you about the book. Let me tell you about Forex trading, what it can do, what are things you should look for in Forex trading. We are the authors of this book, Yes, no, maybe.
Teresa.
Who's Teresa?
Who's Teresa?
Oh, sorry. I was thinking about somebody else. I was thinking about somebody in LA. Sorry.
We're all a bit confused for a second.
And the name of our book is How to Profit from Shifting Currencies in a Global Market, Currency Trading and Internal Analysis. And we have the cover, like the cover of the book, the back of the book, like everything's designed ready to go to the publisher now.
So I'll just jump in for a second. So Taimour, so one of the questions I want to ask, especially because Howard's here, and it's something that was on my mind. So right now the book is kind of positioned as a very generic beginner's guide kind of thing to Forex trading. What is Forex trading? What are all the things you should look out for? I'm wondering whether we should adjust the pitch or the title of the book that matches a bit more towards AFG. I know you can't, you can't sell and you don't have a license to sell, but is there any way we can kind of meld the book together a bit closely more with all AFG's principles or values and kind of merge it to even with your other book? Because right now the books are very kind of solo and just very generic books, and there are thousands of books just like those out there, to be honest. Let's be honest.
No, but
Can we
the book is really good to send to clients. It's just a credibility thing. If you're speaking engagements at a conference, hey, I'm the author of this book, look at this book, or you can give it away. It's more a sales, it's
right,
a
okay.
credibility thing.
Okay. So
Yeah,
so
well-
it's not so that we have to push a certain message that's relating to all funds. It's just more of a kind of a marketing thing, right?
It is a marketing thing.
Okay.
Yeah, again, what's the goal? The goal is
Yeah.
we've got, I don't know, 300-400 people in our database. We want to reinforce to them that we're experienced, trusted, and good and proven at what we do. So even if it's as basic as, well, then at least some of those people go, oh, these guys definitely know their stuff. We haven't just skipped to how to become a cash flow millionaire and live your dream life.
True.
And it may be bullshit, but you're not a fly by night. You actually have a book. You know what I'm saying?
Yeah. It changes the image.
Correct me if I'm wrong, Taimour. The way you're going to promote this, though, is via the webinars, via the database, via YouTube. So you have poetic license in there to yes, there's a title of the book, but you're gonna wrap around that anyway. So it actually won't be the title of the book that will be hooking people in to go, oh, what's this book about? It'll be Taimour's messaging, and then the byproduct will be, oh yeah, I want to buy that book, and then I want to book a call, and then I want to do it, or attend a webinar, or whatever.
So my question is, should I put a pause to marketing my existing book or doing a book launch on this and focus on creating a marketing launch for the Asanka book?
I'm gonna jump in here. I don't know if Howard has an answer, but in my perspective, obviously maybe I'm biased because I'm running this Forex program. Obviously, I want to push as hard as possible. But it seems that in terms of the proposition and what we're selling, the book, the first book that you showed, which was just around structured finance, there's no clear product you're selling on that, right? Versus the Forex one where there is a clear product that's already running. So I think in terms of timing, it makes sense to go with Forex now because we just launched, versus a structured products thing, which you've been kind of a traditional view on structured products. It's you're not specifically selling anything new on that because that's something that's been your bread and butter for years already.
Right.
That's just my view.
I'm good. So Russ, do you have a vote?
How are they going to buy the book?
Amazon.
How much it cost?
I'm not familiar with the digital capability of Amazon. But are you able to influence, because you've bought this book, others buy this book as well?
Yeah.
So could the Trojan horse be the Asanka book?
Yeah.
And then, by the way, people who bought that book also bought this book, which is your other one.
What are you charging? What are you charging for the book?
We haven't launched it yet. Usually Amazon gives me a general pricing. I honestly don't know how the hell they get their pricing on.
And what do they get?
Structure. Give me a second. Structure demystified is $23.99. Listen, it doesn't pay my mortgage for sure. I think
$99. Yeah.
It's more like it creates credibility. Like if we're doing webinars or events or whatever, we can say we've authored a book. It's more like a credibility thing. And
it's not about making money. You're never going to make money on a book.
Yeah, 100%. Yeah. But I don't know how much I paid on the book, believe it or not. So it's not like it wouldn't pay a mortgage for a month at all, even like for the whole year sales like that. So
Sorry, what was the question
Don't worry
again? Just
about
from
the
the start, I
sales. It's
guess.
purely
Okay.
a sales telling you.
yeah, so here's what I'm kind of taking away from this conversation. What I'm taking away is pause the market launch of the current book and focus on doing a market launch with the Asanka book.
How many books are you planning on writing? And in what time frame per year?
I was going to write another ebook on settlements, clearings and settlements, because nobody's written anything on that niche. And another one that I have in the hopper is private banking, just because of the work we're doing in private banking. And the private banking was going to become a book. The clearing settlements is so small; it's like maybe 50 pages long. It cannot turn into a book. It'll be like a digital ebook. But the other ones, there's enough content to turn it into a book. But that was the only two that I was going to do for the rest of the year, and that was it.
Just something in Russ. My perspective is we should be doing launches or book launches or any kind of launches in conjunction with a program launch. It doesn't make sense launching something where it's just kind of like sitting around and floating in space when there's no kind of accompanying program that you're pushing. Which is why I think the Forex thing makes sense, because we just launched the Forex program. Launching the demystifying structured finance, there isn't a program you're pushing specifically for that. So I think even for the future ones, private banking or whatever the other ones you're doing, it should be in conjunction with the launch of something, just for more impactful effect. That's my view.
That's true.
I don't know, Russ, what you think? If you have some other ideas. Yeah.
Well, again, the outcome we're trying to achieve is the right persona to become part of our database, to become part of our webinar circuit, to book a paid call and become a client, regardless of solution. So yes, your book is more pointy. So you would have thought the videos Taimour does, the emails, and then Bamamang should equal direct clients for Forex. But the other one, the structured finance, would be more someone who's in that space going, okay, I was looking for a credible partner because I have this challenge I'm trying to solve, or I'm trying to find this type of partner. And so our web is cast wider, and it brings that persona through to our ecosystem. So the same thing I'm trying to bring through for Taimour is structure. So I'm wondering if there's a book launch every 6 months, or if there's a book launch every quarter, or whatever it may be, to then help Taimour align his energy, because it's something he's passionate about. And if in that period then something specific comes up, I'm pretty sure he could write a book on it. If like your Forex, he's just done it, great. So it's good timing for that one. The other one can happen whenever. The private banking one can happen whenever. All of that stuff. But then at least it gives Taimour a vehicle to express himself and get his content and his knowledge out there. And it gets fresh content out there for us to attract the right people.
Right. So, yeah, that makes sense.
So that's why I'm asking what sort of frequency you're thinking. You know the workload of it, Taimour.
It's a lot of work, Taimour.
Yeah.
A lot
of work, yeah.
Yeah.
And I don't think there's any harm in backing them up either. So it's great.
Why would you do more than one every twice a year or whatever?
So then back them up.
Tell me why.
Yeah, get ahead of the curve, Taimour. So go the Forex one now, go the next one another 6 months, and write next year's books now, and just launch them every 6 months.
Yeah, I can do. Okay, cool. Okay, wait. Anything else? So Asanka, did you get what you came to get?
Oh yeah, definitely. How it really helped with the general pitch and kind of how we should be directioning the Forex program. So I made notes already. I'll share with you guys as well. I saw you sent a list of example names, Taimour, in the chat.
Yeah. I'm not attached to it. I just want to say I'm not attached to it. I went to ChatGPT.
Okay. I copied them.
Could you create a name using these things? And that's how I came up with the name.
Yeah, one of the names that stuck out that Russ mentioned was savings and steroids and stuff like that. So I made some notes. We can kind of brainstorm around those. But generally, the pitch from Howard, the approach made sense. So thanks, Howard, for that. Appreciate it.
Okay.
Awesome. Okay, so Asanka, I'm going to let you go. Thank you.
Okay. Thanks, guys.
Thank you very much for your
Cheers.
time. So Asanka, as
All
the
right,
next
see ya.
step, you're going to talk to Sarah and book a call with Sarah.
Yes, already in progress. Yeah.
Love you. Thank you so much.
Cool. See you guys. See you.
See
Cheers.
you. Thank you. Russ, anything you want to talk about, discuss?
No, all good.
Okay, good. So you're more than welcome to stay if you want to stay. I just want to say that to you. I had an agenda with Howard. Howard,
Yeah.
you stop sharing your screen. And Howard, this was like I sent you the product services page. Is there something that sticks out for you that you think I should change?
At the very beginning, there was something. I love the second paragraph.
But the need for nausea.
All of that. I love that. I think as I didn't like the solution to all your problems. That was all your problems is like a little too broad. Is a solution. Just you don't need all your problems.
Got it. Thank you.
But I thought it was great.
Okay, perfect. Thank you. That was the only thing I wanted you to take a look at.
That was the only thing. The rest of it is it's your process, your fees. It's all pretty, you know.
Perfect. Okay, cool. And then can I talk to you a little bit about the survey thing?
Sure.
The first time you helped me with a survey, let me stop the recording.